A very good evening, ladies and gentlemen, and thank you very much for attending our Q1 investor call. We seem to be having a few problems with the phone lines, and then if at all we get disconnected, please be assured that we'll reconnect immediately. I'm sure that all of you and your families continue to do well and stay safe. At Granules, we continue to face various challenges every day, and we are overcoming these continuously and are able to work beyond our normal capacities. We continue to do our best for the well-being of our employees, and most of the measures we had initiated in March continue to be in place and have further strengthened these. During Q1, the quarter under discussion, we had spent rupees 13 crores towards their well-being. From the bottom of my heart, I thank everyone of the Granules team for making this happen while facing innumerable risks. Now let us get on with the main agenda for the meeting. The company is seeing a much stronger demand growth than originally anticipated. Production today is running at 130 to 140% of year ago levels, and a large part of the current capacity is likely to get utilized fully this year itself, which is much ahead of the originally anticipated timeline. It stands to reason that a strong revenue growth and high capacity utilization level will result in better EBITDA margins. A marginal setback for us during the previous quarter was the recall of metformin ER 750 mg dosage form in the US market due to a slightly higher than FDA allowed NDMA level in one of the 12 batches produced. Given a much stronger and sustainable demand growth in our current high volume products portfolio and an expectation of getting approvals for 4 to 5 high volume and high value complex molecules in the next 1 or 2 years, we have already started construction of a new facility at our existing formulation site at Gagillapur. We will end up spending about 250 crores on this facility over the next 15 to 18 months. This facility will be one of the largest and most integrated multi-particulate system tableting facilities in the world and will be ready by Q3 of the next fiscal with a capacity of 4 to 5 billion tablets a year. This facility, when fully constructed, will also provide additional PFI capacity and an additional compression capacity of 2.5 billion units per year. We expect this facility to pay back within 24 to 36 months from the date of commissioning. This would need some additional capex during the current and next year to keep our growth momentum. But this would all be funded through internal accruals only and not through debt. During the previous quarter, we successfully completed the previously announced tender-based share buyback program, buying back stock worth 142 crores at 200 rupees per share. Despite higher capex and the buyback, we expect to maintain similar levels of net debt as last year, if not better. Key focus on free cash flow generation continues to be our focus. Lastly, on the guidance front, we are confident that we'll be able to cross 30% on the bottom line this year as compared to last year. Now, I request Priyanka to take you through some detailed numbers before we start our Q&A.
Thank you, sir. Before we move on to the financials, I'd like to provide a few updates. Metformin. As stated in the call last month, we continue to have an ongoing conversation with the FDA regarding NDMA in metformin. We believe this to be an ongoing discussion for the industry in general, and we at Granules ensure to focus entirely on regulatory and patient compliance. As reported the previous quarter, the FDA had requested us to test random samples from the market of metformin IR and ER tablets. From the samples tested, there were no issues with the IR tablets and the 500 mg of the metformin ER. We were in correspondence with the FDA in response to an information request pertaining to the 750 mg, and in the process, we had found one batch to have crossed the specifications. While only 1 out of the 12 batches that were tested crossed the specifications, out of abundance of caution, we had recalled the product distributed to the market since we are yet to finalize the root cause. The 750 mg contributed to 0.3% of our FY20 revenue, and we do not see a significant impact on the long-term revenues since 750 mg as a strength contributes to less than 8% of the overall volume of glucophage ER. We do plan to relaunch the product at the earliest. This is a Class 2 level recall, and we are yet to assess the entire financial impact. At this time, we assessed an impact of $2 million, and out of the 15 crores we provided for, 5.38 crores were accounted for in the COMC, reflecting the material consumption, and 9.68 crores were recorded in other expenses. Now, moving on to the financials of Q1 FY21, I'm very happy to say that in spite of extremely challenging situations, we had a record-breaking revenue, EBITDA margin, and PAT margin, the best and highest in the history of Granules. Revenue. The first quarter revenue stood at 736 crores compared to 595 crores in Q1 FY20, an increase of 24% year-on-year. Sequentially, we saw an increase in revenue from 600 crores in Q1 FY20 to 736 crores in Q1 FY21, an increase of 23%. The primary reason for the increase was due to the agility demonstrated on an operational front to cater to a surge in demand pre-COVID and due to COVID across all the markets. We increased our capacities of compression by about 50% since Q1 FY20 proactively with a minimal capex spend, which has resulted in us being able to cater to the increased demand of our products. There was also an element of freight through air shipments that were charged to the customers that added to the revenue but has eventually been netted out in the G&A expenses. We will continue to see a strong growth due to the orders available currently. The sales breakup as per business verticals and regions are presented in our investor presentation, which is available on the website. Gross margin. For the quarter, the gross margins moved from 50.4% to 59.5% year-on-year due to higher realization from new launches, increased market share of existing products, and product rationalization, primarily in the PSI and finished dosage segments. While we will continue to focus on maintaining our gross margins, we might see an impact due to raw material cost increases from our vendors due to COVID and geopolitical situations. In addition to the trade mentioned above, there was also an overhead reversal in the cost of material percentage on account of increase in inventory to the tune of 2.4%. That said, we have begun to pass on some of these costs mentioned above to our customers, so we do not see a major impact in the percentage of gross margin. EBITDA and EBITDA margin. EBITDA quarter 55% relative to 19.9% in the corresponding quarter of the previous year, a growth of 5.03%. As mentioned above, an increase in capacity through operational efficiencies paved the way to increased production with a non-linear increase in cost. We also started to utilize most of our internal API for metformin products, which has in turn enabled us to see a further decrease in cost. In addition to this, our focus on product rationalization based on profitability enabled us to achieve this growth. PAT for the quarter stood at 111.4 crores compared to 83 crores, a growth of 34% year-on-year. The PAT of 1100.4 crores included 15.4 crores of a provision on the account of metformin recall. I would also like to mention that the 83 crores last year included 25.5 crores of profit from our JVs that we have divested. Excluding that amount, the growth today is at 93% year-on-year. As mentioned over the last call, we continue to focus on a strategic shift from top line to bottom line, and we will continue to remain focused on profitability to drive shareholder value. U.S. business, GPI. GPI numbers this quarter were lower than anticipated, primarily for the stabilization of stock levels, which were pulled by customers into the Q4 quarter last year. Also, we did not see the full effect of the 2 launches we had made this quarter in the second half. We aim to launch at least about 7 more products from GPI this fiscal year, 2 of which will be high-volume products from GIL. We also have another 2 products we're looking to launch in the OTC market in the U.S., Tribusa and GCH. Research and development. This quarter, we did 3 filings for finished dosages. 1 was for the U.S., one dossier for Europe, and one in Canada. We also filed one DMF. As mentioned during the last investor call, our R&D spend will be focused on a limited number of medium to large volume integrated molecules, along with a few strategic differentiated products. Our goal is to protect and strengthen our existing products through process efficiencies and innovative technologies within the API and finished dosage spaces to respond to the ever-changing market dynamics. Gross debt. This quarter, we have reduced our gross debt from 884 crores from the previous quarter to 870 crores in the current quarter. Out of this, our long-term debt is 522 crores and debt is 348 crores, down from 372 crores. This was purely due to judicious management of our working capital. We are committed to decreasing our long-term debt further in the upcoming quarters and aim to land at about 430 crores at the end of this fiscal. Cash to cash cycle. Our cash to cash cycle has reduced from 109 days in Q1 FY20 to 103 days this quarter. We constantly endeavor to improve our working capital cycle and continue to negotiate with our key customers and vendors to further improve the cycle. Free cash generated from our business stood at 37.3 crores in this current quarter. We witnessed a drop in free cash flow this quarter due to an increase in receivables resulting from higher sales and increase in inventory. During the year, we'll be generating sufficient cash to fund our capex requirements of around 350 to 400 crores this year. The status of pledge. This quarter, the promoters have reduced their pledge shareholding by 12.95% and have about 3.65% remaining as of date. As committed a few years ago, the remaining pledged amount will be extinguished in entirety by the end of FY21. With that, I would like to again thank each and everybody who worked tirelessly towards achieving our targets, and I'm very optimistic about the year to come. With this, I'd like to open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Ashwini Agarwal from Ashmore Investment Management. Please go ahead.
Hi, good afternoon, Mr. Krishna Prasad, Priyanka, and the rest of the team. Congratulations on a wonderful set of numbers and the cash flow generation, working capital management. All are, picture perfect. So very, very good job and congratulations. Two questions. One is, in your results and accompanying notes and presentation, you've called out two numbers. One is, of course, the 15 crore provision towards metformin ER, and another is a 13 crore COVID-related expense. So should we consider the full 28 crores as one-off, or the COVID-related expenses will continue for a while?
So, first of all, thank you very much, Ashwini.
Yeah.
The 13 crore COVID-related, we don't know how much would be incurred this quarter, but some of this will continue. And it all depends on what is happening with all of us in the world. So, at least this quarter it will continue, and next quarter we'll have to see what will happen. And recall, you want to answer, Priyanka?
Hi, Ashwini. Thank you so much. With respect to the recall, because of the volume of product that we had in the market, we are unable to assess the entire impact. That said, we did recall all the 12 batches, and we do estimate a portion of the recall cost to fall into next quarter and possibly the quarter after as well. So I don't think this will be a big amount that will impact our numbers significantly.
Okay. And the second question is, I mean, you were very clear in your opening remarks, and that gross margin is probably going to remain stable despite some tailwinds and some headwinds that you saw during the quarter. What was the revenue number which was carried over from the March quarter into the June quarter? Is that sort of one-off lumpiness of any nature or not really?
Ashwini, let me take this question. The revenue number was about, carried forward, was about 35 crores. However, this does not have any positive impact on Q1 revenue because by the end of Q1, we had a higher inventory due to logistics issues. We could not ship enough product, and compared to end of Q4, end of Q1, we had inventory which was 60 crores higher. Q4, we had 200 crores closing inventory of finished goods, and Q1, we had 260 crores. So definitely there is no impact, no positive impact of the carried forward sales from Q4. In addition, there had been a negative impact because the inventory had built up, which we would see in Q2. And if some of the logistic issues continue, Q2 and Q3 also.
Okay. No, that's very clear. Thank you so much for providing that clarity. So in some, revenue line is pretty much normalized. On the cost side, we have had a few one-off elements. So that's quite encouraging. Is there a potential that the R&D costs go up from here as you look for growth opportunities, a couple of years down the line, or would that remain stable at the current run rate?
So, Ashwini, I'll take that question. We do plan on increasing our R&D expenses. This quarter, we didn't hit our target in entirety. We missed a filing or two only because of COVID-related disruptions. But that said, we are, like I said in the previous call, we are very judiciously watching the quality of ANDA, and our portfolio is being rationalized thoroughly. So as a percentage of sales, the R&D expenses will go down, but in absolute terms, we have a budgeted amount that we will hit this year, and going forward will remain at the same amount. That will give us our target number of ANDAs, dossiers, and TMFs.
Okay. Thank you so much. All the best once again, and many, many congratulations.
Thank you so much, Ashwini.
Thank you.
Thank you. The next question is from the line of Chirag Dagli from HDFC AMC. Please go ahead.
Yes, sir. Thank you for the opportunity. Sir, for metformin ER, at what level is the issue in your assessment? Is it at the formulation level? Is it at the API level? If you can just throw some light on, in your...
Ladies and gentlemen, the line for the management is disconnected. Please hold while we reconnect them. Thank you. Ladies and gentlemen, thank you for patiently waiting. The line for the management is reconnected. Thank you, and over to you.
We're waiting for the
Mr.
question.
Chirag, please go ahead with your question.
Yeah, sir. Am I audible?
Yes, you're audible.
Yes. So, sir, I don't know if you caught the question. This was about metformin ER. At what level is the issue, sir, for the NDMA impurities? Is it at the API level? Is it at the formulation level? And, when there is no product in the market, do you think the market will shift to some other products?
I'll take this question, Chirag. The product is at a formulation level, and at a formulation level, it's only at the ER level. At the ER level, it's only at the 750 mg level. And let me please clarify that this is the RLD of this ER is glucophage ER and not any other product. what was the second half of your question? Sorry, what was the second half of your question?
Will the market shift to any other product now that everyone's recalling products?
We don't. There is no substitute for metformin, Chirag. We only see the demand moving from maybe 750 mg to 500 mg, and we definitely see an increase in the IR. But because we're present in both, I don't think this will impact us in any way.
Understood.
I think, in fact, we might have a positive impact because our product has been cleared with IR and 500 mg as well. So if anything, we'll see a positive impact.
Understood. And in your opening comments, you mentioned, Priyanka, about some reversal of inventory, which was about 2.4%. I was not actually clear what exactly this was.
So, Chirag, because of the increase in inventory at our subsidiaries, we had to consider the overhead cost as a part of our material cost. So that reduced the cost of materials, that increased our gross profit levels. This is an accounting practice.
Understood. On an absolute gross profit in rupees crores level, there is no impact in what you're doing.
No, there was an impact. I'll let our CFO answer this question.
When an inventory gets built up between the opening and closing inventory, as the closing inventory is higher, there will be a reversal of profit, and therefore there will be a favorable impact in the material consumption line. So that has exactly happened. So we have got benefit in both, meaning that in the gross profit in value and also in percentage.
And that is 2.4% of sales.
Yeah, that's right, Chirag. However, assuming the inventory was not there, and if they had sold the product, then the profit would have been much higher than this. So in absolute numbers, the profit would have been higher, though on percentage-wise, a percentage would have gone up.
Understood. And the last question, sir, if I can, in terms of ANDA filings, how should we think about the number of filings every year? And, maybe slightly longer term, not the next couple of years, but beyond that, how should we think about the R&D pipeline?
So, Chirag, like I mentioned last time in our investor presentation and the call, we will be focusing on a limited number of ANDAs, but we'll be focusing on strengthening every single asset that we have currently and going forward. So in terms of ANDAs and dossiers, our target will be between 7 to maybe 9 ANDAs dossiers per year, but we'll be spending significantly on backward integrating the products, because that's the name of the game today in terms of protecting the assets you have, and that's the only way we know we will have sustainable growth going forward. That said, in terms of R&D, we will be, even the ANDAs and dossiers that we develop will be more value accretive than the products that we have now. And a lot of the expenses will be focused on the GIL products, which is basically high to medium volume integrated products versus our more differentiated products, because at the core of our company, we are a manufacturing company and will continue to remain that way.
7 to 9 is not the next 2 years, but thereafter, is it?
No, even this year, next year, we'll have between 7, 8 to 9 filings per year. Then this could be ANDAs and dossiers, because like I said last time, we are utilizing the advantage that we have on being integrated on our current core molecules and the other molecules that we've added by expanding globally. So we are extending our US ANDAs to Europe, to Australia, to Canada, and we'll start in South Africa based on the business cases that we see. So including that, we'll have between 7 to 8 to 9 filings per year.
But specifically for the US, Priyanka?
I can't say, but we're at least targeting 5 products at the least per year.
Understood. Thank you.
Yeah.
Thank you. The next question is from the line of Madhusudan Kela from MK Ventures. Please go ahead.
Congratulations, Mr. Krishna Prasad, Priyanka, and the entire team. What a splendid show in this challenging time. So, heartiest congratulations from all of us to the entire team. So, my question is little longer term. we've seen company generate free cash flow this year and even last year. Should we assume that over the next 3 years, even after considering your capex plan, we will still continue to see free cash flow from the company? And also, we saw a fantastic gesture in terms of buyback last year. Will that practice continue at least in a foreseeable future for the next 2-3 years, as and when you have free cash flow?
First of all, thank you very much, Madhu. And regarding the free cash and the capex, I think I made it very clear that all our capex will be funded only by internal accruals. And I'm pretty confident that after funding our capex, there will be some cash left. Now, for sustaining our growth rate, we need to invest in capex. And however, we may not have a lot of cash left, but some cash will definitely be positive. And regarding buyback, yes, we had deliberations in the board about increasing EBITDA. Sorry for the dividend. Sorry, I don't know how. Okay, but then we felt that we need to conserve cash to fund our capex growth, and also, and COVID, if there's some uncertainty, it's better that we keep cash in the books rather than distribute it today. So as and when we have surplus cash, our intention is to keep doing buybacks. So it all depends on how much goes for capex and how much free cash is left. Based on the then situation, we take a call, but the intention of doing buybacks is still there.
Oh, that's fantastic, sir. So my one last question I had was, right now going is all good and the team is doing fantastic work. What are the key risks which you see over the next 2-3 years, if there is any, which you would like to share with all of us?
One of the biggest risks we all see and everybody is debating about is the geopolitical circumstances. So anything that happens with China is not only going to affect us, but it's going to affect the whole world. Pharmaceuticals would be in short supply across the world, but I see the possibility of this happening as very remote. The whole world and countries are interdependent today. No country they can do without the other countries. Not only in pharmaceuticals, across all trades.
Hi, Madhu. I'll just take a part of that question. But that said, as a company, we are trying to reduce our dependence on China. Today, three products come from China, major KSMs, 2 of which we have taken care of by having multiple sources. There is one KSM that we do import quite a bit from China, but we are working in the background to backward integrate into that product, and I think that will be a strategic product that Granules will get into over the next couple of years. So that way we will also be getting lowering our dependency on China. That said, in the near term, any boycotts or bans will be very counterproductive for the Indian industry that imports about 70% of its products from China, because it will be hindering access to medicine all over the world. So I don't think any boycott or ban would happen anytime in the near future.
Yeah. Thank you so much, Priyanka, and all the very best. God bless.
Thank you. Thank you so much.
Thank you. The next question is from the line of Ravi Sundaram from Sundaram Family Investment. Please go ahead.
Thank you. Hello team, thanks for the opportunity and congratulations for the excellent set of numbers. I just have 2 questions. The first question, I think though the previous participant covered it, I probably need some little more details. First, R&D, if we see it is coming both as a percentage and as an absolute value in terms of R&D percentage. So why is it happening? Is it any reason? I think I'm even looking at it sequentially from Q1 FY20, from about 340 it has come to 200 crores.
I'll take that question. R&D, like I said, as a percentage of sales, it has come down because the sales have gone up. But that said, the first couple of years, when we especially launched into the US market, one of our learnings when we launched into the OTC market was that we didn't have a basket of products. So we were very clear that we wanted to have a basket of products before we entered the RX market. So we had up to 13, 14 filings coming from one site. So overall, about 14 to 15 filings coming from just one site for the US market per year. Launching those products where you have no value or little to no value advantage was and will continue to be an issue. So we've changed our strategic approach to R&D a little bit, where we invest more and only in products that we have a strong value proposition on. And that kind of limits us in terms of number of ANDA filings. What we're working on, like I said, is to increase our DMF filings, etc., to strengthen these products. And sometimes it's more about the process efficiencies rather than the R&D process in itself. So while you see the R&D expenses possibly going down, that amount will be spent on possibly on capex that we need to make sure that these kind of products that primarily work due to process efficiencies are commercialized in the best possible way. I hope I answered your question.
Yes, madam. Any guidance on R&D for the current year?
We've always said that the guidance would be about 150 crores per year.
Okay. Okay. My second question is on the buyback. I think buyback was at 200 rupees. And any reason why the management, I know it was to reduce the pledge, but we tendered a bit extra also compared to the entitlement. Considering that the business has been doing phenomenally well, was there any reason? Did we deliberate about this?
Ravi, was it that you said we could have tendered more, or what was the exact question?
My question was the buyback was at 200 rupees. I think considering that the business has been doing phenomenally well, I think the valuation could be even much better than current market price is my personal understanding. So why did the management tender at 200? Could we have waited or any color on that?
Ravi, the important thing here is not to get some extra money or extra cash. We wanted to reduce the pledge. That was the key objective. And I didn't think it was right to wait and try to sell it in the market. So we thought it is safe to tender. And we had a plan to tender, so we didn't want to change our plans. We went ahead and tendered. Mm-hmm. Unfortunately, others did not because they had no reason to do that. But we didn't see any reason to change our plans. And we are happy we went ahead and we reduced our pledge. We paid back 100 crores and now there's very little pledge, and I think that will also be extinguished pretty soon.
Yep. But actually, thanks for that clarity because that's something that there was a question in the investor community. And my last question is on the Onco block. Sir, how much, has the commercialization of it started? It's not any timelines on that?
Ravi, we have started commercializing the oncology block. We started seeing some revenues from the API facility, but for us to see significant revenues coming from this, material revenues coming from this site will take us a couple more quarters.
Okay. Okay. Thank you very much, and all the very best for your subsequent quarters. Thank you.
Thank you. The next question is from the line of Kaustav Bubna from Rare Enterprises. Please go ahead.
Yeah, hello.
Yeah.
Hi. So just wanted to know what type of capex would be needed for the next foreseeable future, 3-4 years, to maintain this type of growth? In what field, what type of capex,
Capex, we are looking at about 350 to 400 crores this year and possibly another 300 crores or so next year. So we cannot foresee beyond that. But we are sure that we are going to match our capex to try and maintain the current growth which we have. And we are pretty confident that going forward with the new product launches and all, we are pretty sure that we can maintain this growth. And like I said in my opening remarks, we are investing in a MUPS block. This is multi-particular sustained release products. This is going to be one of the largest in the world and fully integrated. So that is going to make a big change for us. Like the value per 1,000 tablets or per tablet there is many, many times more than our current products. And since it's a little more complex in manufacturing, the margins are also good. And with our efficiencies which we developed in high volume manufacturing and low cost manufacturing, we have made some changes and tweaked the process, and we believe we will be very cost efficient, and this is going to maintain our growth.
Okay, just
And also
one
we are
more.
looking at API production, different APIs, which will also add to our margins.
Great. One more question on your US FDA approved plants. Currently, how many US FDA approved plants do you have, and how much revenue does that contribute to your total revenue? And in 3-4 years from now, what would you expect that number to be, both on the amount of plants and the amount of revenue it contributes in total?
I'll take that question. I mean, you mean GPI, correct?
Yeah.
Okay. As of now, in terms of revenue this quarter, about 11% of our products of our top line came from GPI. Going forward, we expect this business to go fourfold in the next 3 years. So we are expecting this business to at least.
Ladies and gentlemen, the line for the management is disconnected. Please hold while we reconnect them. Thank you. Ladies and gentlemen, thank you for patiently waiting. The line for the management is reconnected. Thank you, and over to you.
Apologies for the disconnection. Hi, can you hear me?
Yes, I can. Yeah.
Hi, sorry, apologies for that, Kaushal. So I was saying that within the next 3 to 4 years, we see the GPI revenues to at least grow fourfold.
Okay. And what's that? Yeah, go ahead.
As a percentage of revenue, we don't look at GPI in particular. We look at the U.S. market in totality, and we expect it to get to between 68 and 70% of our overall revenues.
And what would the margin profile be for U.S. versus the rest of your business for formulation?
I mean, I can't really put a number on the margins.
So steady state?
I'm sorry?
Steady state?
Steady state revenues for...
No, just wanted to get a sense of, so your growth, which let's say is formulation based, just wanted to get a sense, what is the incremental growth margin supposed to be versus your normal portfolio?
On an EBITDA level?
On an EBITDA level, yes.
At an EBITDA level, we've always committed to an increase in 1% year on year.
On formulation.
But if it's just on the formulations, we haven't
Yes.
necessarily calculated it. But a majority of this business will come from formulations. So
Formulations is the highest margin products we have. And new products that are coming in formulations are also going to have increased margins. So it's formulations and then PFIs and then APIs. That's the order of margins we make. So definitely going forward, as formulations sales increase as a percentage, the margins also will increase. And that's what we have factored into our entire growth plan and also our guidance of 30% this year and possibly 25% after that.
At a PAT level.
And for this full oncology capex that you've done, what is the maximum amount of revenue this can generate, like assuming that everything goes on successfully?
So first of all, let me clarify. We called it an oncology facility in the past, but the fact is, it's a multi-API facility, an infrastructure which we have built. And oncology block is just a small part of it. We spent about close to 80 crores out of the 290 crores on the facility. So oncology, I would not be able to put an exact number. We see some potential, but more than that, we have a block with a lot of infrastructure and a pilot plant built in there. And today, we have a lot of APIs which we have filed DMFs and which we have also qualified in our new filings for ANDAs. So we are planning to scale up those products. We are putting extra reactors and we will be scaling the products there. So going forward, the growth is going to come mainly from other APIs as compared to onco. APIs, there's a lot of potential there. We've created the infrastructure, and that site is good enough to take us forward for another 4 to 5 years of growth on APIs. So all we have to do is keep on putting equipment or a new block, which will not cost as much as a greenfield venture. That will be brownfield, and all brownfields will yield a quicker return.
This is the operator. Sorry to interrupt you. Mr. Bubna, may we request that you return to the question queue for follow-up questions?
Yeah, okay. No problem.
Thank you. The next question is from the line of Deepak Katwani from Girik Capital. Please go ahead.
Yeah, hi, sir. Congrats for a good set of numbers. I had a couple of questions. First is, if you can, put a qualitative as well as quantitative color on the growth potential of your core molecules, and how much did they contribute to the revenue in this quarter?
This quarter, the core molecules contributed to about 85% of our revenues.
Okay.
See, going forward, these 5 molecules will remain to contribute a significant amount to our top line because of global expansion of our molecules. We see it at around 70-75% level, even 3 to 4 years from now. Primarily coming from revenues that we get from various regions. Again, one rationale is to be able to have a market share and maintain that market share in these kind of molecules takes years, and we're never going to let go of that capability. Like we've said in the past, we've said that we are adding more core molecules to our business. But while we get to this level for those molecules, it will take us some time. And also, if you look at the overall global scenario, there's only a few molecules that have the volume and the value that these products do.
Right.
So these products will continue to be a focus for us going forward, and will continue to be our cash cows.
This is the operator. Sorry to interrupt you. Mr. Katwani, may we request that you return to the question queue for follow-up questions, as there are several participants waiting for their turn.
I just have a follow-up on the answer. Hello?
Please go ahead, Mr. Katwani.
So yeah, I was asking, just to add to that question, as to when you talk about core competencies, or what actually your core competency in these molecules, because these are pretty generic molecules, right? So what does Granules do differently than other people, in terms of getting more market share?
Okay, first of all, Mr. Kaswani, the very fact that we have such huge market share in the US as compared to people who have been there for ages, it shows that there is something different, okay? And we are cost effective. So we are not definitely the cheapest, but people have a lot of faith and trust in our delivery. One reason is integration. We make all the APIs, we are integrated across the value chain. And the second reason is our manufacturing, I would say, philosophy itself is totally different. We don't manufacture products the way the typical pharma industry works. We have a different way of producing, and it creates a lot of cost efficiencies, and that has proven itself by the market share which we have. Also, other main and key factor is our regulatory compliance. So we, in the entire history of Granules, we never had any regulatory compliance issue, which is very, very rare in today's world. And this gives the confidence to all our customers that we will deliver and deliver on time. So integration, unique way of manufacturing, and finally regulatory compliance, and also our history of supplies, which were built over a period of time, gives confidence to the market and they buy from us.
In addition to that, I think I'd just like to add that our batch sizes are rather large, and to understand the philosophy of that, please just look at our website. There's a clear understanding of how the large batch sizes result in cost efficiencies and operational efficiencies. And I'm happy to take a call offline to explain that in detail to you.
Thank you so much. That'll be helpful. So great. I'm happy with the explanation. And congrats again for the numbers.
Thank
you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to one per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Kunal Mehta from Vallum Capital. Please go ahead.
So thank you very much for the opportunity. The question I have is, so can you give us an understanding of this new capex which you intend to do for the next 2 years? I'm sure you mentioned that the new capex will be focused on the existing core molecules, but could you just give us an understanding of the new capex in a bit more detail?
Sorry, can you repeat the second part of the question?
Yeah. So could you please give us an understanding of in which areas do you want to do the new capex which you are planning to do in the next 2 years? You mentioned that you plan to do it in the core molecules, your top 5 core molecules. Could you just give us some more understanding on this front?
Core molecules will continue to grow as we go to new geographies, and that will need some capacities, additional capacities. But the key thing is, as we go forward, I mentioned a little while ago that we are investing in a MUPS block which can make sustained release tablets, multi-particulate technology. And this is a little complex technology compared to normal manufacturing, and the scale at which we are going to manufacture is different. So our main investment for this year and the next half of the year, 250 crores, would go into this block. And also there's some investment that go into API and backward integration into some of the I would say basic raw materials. And then the API investment mainly will be in Vizag Unit 5, where we said we are going to add on more reactors and more blocks, and that site is created for the next 4 to 5 years.
Understood, sir. And so the specific block, just to follow up on this one, so the specific block which you are creating with a different size, so the products that you are going to manufacture in this block, are they going to be the same ones, metformin, acetaminophen, paracetamol, or they are going to be the different products which you are going to manufacture?
Metformin and ibuprofen are not made with multi-particulate technology. It's a rather straightforward technology. But this block is going to do multi-particulate, where you can do products like omeprazole and metoprolol and so many other products, It doesn't. So they add a lot of value, and it's not easy to manufacture this product. Like I said, we found simpler ways of manufacturing this.
And even in terms of the other block that CMD just mentioned with respect to APIs, these APIs are not going to be any of the core molecules. These APIs are basically going to be for products that we've already filed for or are going to file for, which we think have a strategic importance going forward in terms of finished dosages. So we're going to be backward integrating into these APIs. So like I said, we will be strengthening these to strengthen the finished dosages. And Unit 5 will be a multi-API facility.
Understood, ma'am. Understood. All the best for the future. Thank you.
Thank you. The next question is from the line of Tushar Bohra from MK Ventures. Please go ahead.
Yeah, thank you so much for the opportunity. And congratulations to the management for an excellent set of numbers. Now, couple of points on the on the way forward. So you mentioned CDMO/CMO for oncology and multi-API block in the presentation. If you could help us understand what is the strategy on CDMO and whether, how advanced is our strategy on this? Do we already have discussions in place, or if you can just give a roadmap for this particular segment for next 2 years?
Sure, Tushar. I'll take your question. I think we should have made it a little bit more clear in the presentation. But we said that Unit 5, there is an oncology block, and then there's a non-oncology block, and then there's just space available for any new growth that we wish to have. So only the oncology block will be focused on CDMO and CMO projects. So oncology, we are working with strategic partners. We have developed some APIs. We filed some of our APIs, and we do plan on selling them to customers once they're approved, and we already started seeding samples, etc. But the oncology business in particular, we're tying up with strategic players who already have a front-end presence to work with them to grow our business. We're not going to be front-end in the oncology business because as a company, we are going back to focusing on what we know best, which is manufacturing efficiency. And that said, we do have a strong R&D to develop with our oncology capabilities. And that's where we're going to be utilizing the R&D for CDMO business and the manufacturing side for CMO business. The rest of the 70% of the spend or the area will be used for multi-APIs that will primarily be used for integration for our own products, and a part of it will also go to third-party as third-party sales.
Great. Thanks, that helps. Second, on the...
Thank you, Mr. Bora. This is the operator. May we request that you return to the question queue for follow-up?
I have just asked one question. I'm sure you can allow me one more.
Please go ahead.
Yeah. Thank you. Thank you so much. So, regards to the overall volume-based business, you mentioned that 2 launches in this financial year will be in the high-volume products. So, it would be fair to assume that they would be from your emerging segment between losartan, cetirizine, and one more that was mentioned in the presentation. When we say high-volume products, we were referring to that one, right?
So, it would be products like losartan, cetirizine, fexofenadine. We're going to be adding more value-accretive products, and we already have some of the filings made. We're launching some products this year. So, those are the kind of products that we'll be increasing our R&D spend in. But again, I'd like to say that we're not going to be spending more R&D on, say, a metformin at this point. The core molecules will remain the way they are, and any spend on the core molecules will be outside of this R&D spend. That will be a strategic project that we pick up in its own.
Fair enough. But these molecules that you're launching, can any of them actually be...
Operator, sorry to interrupt you. May we request that you return to the question queue for follow-up questions? We have several participants waiting in the question queue, sir.
I'm just trying to complete my question. I'm not asking a new one, right? You have to allow me to at least get my point clarified.
Yep.
Yeah, thank
Please
you.
go ahead.
Sorry about that. Just only point was that these launches that we're considering, the new volume ones, do we expect that some of them could sort of be comparable to the top 3 molecules for us at some point in future? I mean, are we looking at them as that kind of scale, say, over a 3 to 5 year period? Is that to assume that?
Like I said earlier on my call, earlier in my conversation, the products that we have already been present in over the last 5 years, especially para, metformin, and ibu, there may be 1 or 2 other products that are of that scale and that value. So for us to reach, so the products that we have picked right now, in general, overall market, there's not that many products of that volume. So no, I will not say that any of our products will reach up to that level, but there will be a significant contribution coming from these molecules. A very significant contribution, but they won't be at a level of ibuprofen or metformin.
Very well. Thank you so much. Wish you all the best.
Thank you. The next question is from the line of Ritesh Bhagwati from Rockstar Capital. Please go ahead.
Thanks for taking my question. So most of my questions actually have been answered, but then I just have one question actually in regards to the margins. So in this quarter, I think we recorded a bit of 25%. So like, can we assume like this is going to be a start of our further improvement in our margins, or are we at the top of this level going ahead? So can you just guide us on that?
EBITDA, we've always been saying that 22% is what we aim for. But looking at the current trend, we think that we will be able to maintain about 23% EBITDA going forward. So, however, like I said, with even this 23% EBITDA, we are very confident of reaching our guidance of 30% growth in bottom line this year. And possibly after that, on this year's profit, maybe 25% next year. 23 is what we can take into account.
Okay. And I just needed some clarity.
This is the operator. Sorry to interrupt you, Mr. Bhagwati. May we request that you return to the question queue for follow-up questions? We have several participants waiting in the question queue.
Okay, no problem.
Thank you. The next question is from the line of Nitin Agarwal from IDFC Securities. Please go ahead.
Hi, thanks for taking my question. So, sir, we had a very sharp improvement of 900 basis points in the gross margins on a YOY basis. Will it be possible for us to give us some color on the various constituents which drove up gross margin on a YOY basis? I mean, price hikes, market share.
Please use the handset mode. There is some echo from your line.
Hello, sorry. Is it better now?
Yes,
it's better now.
Yeah. So I was saying, will it be possible for us to share the gross margin? You know, we have the dramatic improvement in this quarter has been on a gross margin performance. We've almost delivered 900 basis points on a QOQ on a YOY basis. Will it be possible for us to understand a little better, in terms of various constituents which drove up this gross margin, to this level?
Sure. I'll take that question. Like I answered like I mentioned in my in my opening remarks, we've had some freight costs that the customers paid for that were added to the gross margin. In addition to that, there was an overhead reversal in the cost of material on account of increase in inventory, and that added up to about 2.4%.
However, let me also clarify. Gross margin percentage is a factor of product mix and also build-up of finished product inventory. So different product mixes have different margin percentages. However, some of those high margin products are slow to manufacture. So if we have to make 100 tablets of high margin products, in the same time we can make 300 tablets of the low margin products. So if you see in the same time, the overall profit number in absolute terms would go up, but percentage may not. So percentage will keep varying either way. It could go positive or negative based on product mix and also the inventory levels. But however, we are very confident that as absolute numbers will keep it growing.
Okay. Thank you. Best of luck.
Thank you.
Thank you. The next question is from the line of Bharat Celly from Equirus Securities. Please go ahead.
Yeah. Thanks for the opportunity and congrats for the good set of numbers. So I just wanted to get a clarity that how API prices, so you mentioned that a couple of APIs have seen an increase in prices. So just wanted to get a clarity which APIs were those and how the price has moved for those APIs.
Are you talking about API price increases?
Yeah.
Okay, APIs as such, some of the APIs we buy have not increased much, but for some of the APIs which we make, the key starting material, some of those have gone up, especially one out of China. So it has stabilized. We don't think it will go up further. However, we were able to pass on some of these increases to our customers and get better realizations. So we don't anticipate any major issue going forward on API price or these increases.
Okay, thanks.
Thank you.
Thank you. The next question. The next question is from the line of Charulata Gaitsani from Dalal & Broacha. Please go ahead.
Yeah. Hi. My questions of the total revenue growth, could you split it up between volume and prices and new products?
We unfortunately don't have the breakup, but if you reach out to our correspondent, I'm sure we'll be able to give you some details, as we don't have the numbers ready with us right now.
Okay. And going forward, what would be the contribution of core molecules over the next 3 to 4 years?
I mentioned this in my response about 2 questions ago. The contribution will be around 60 to 70, 75% over the next 4 years.
Okay. Existing is 85.
Existing is 85, and by core molecules, I specifically mean paracetamol, metformin, ibuprofen, methocarbamol, and guaifenesin.
Okay. Fine. Thank you. All the best.
Thank
you. The next question is from the line of Cinderella Carvalho from Centrum Broking. Please go ahead.
Thanks for taking my question and congratulations on great set of numbers. If you could help me understand the demand scenario. We have said in our interaction that we have seen some market expansion. We have seen
geographic echo on your phone. Maybe, I don't know.
Ma'am, please use the handset mode.
I am already on a handset.
Okay.
Could you please repeat your question?
Yeah, I want to understand more from a demand sustainability. If you could help us understand the key parameters. You have explained that there is a market expansion and there is a increased demand. So if you could help us understand the key drivers of each segment.
It was, it came from all the products, not necessarily a few products, all the core molecules. So it was both pre and post-COVID. It could be because some of the products, metformin has been seeing some NDMA issues. That is one of the primary reasons. And again, being first line of defense, we have some products like paracetamol, ibuprofen, etc., which also contribute, which are basically the first line of products that people take even during the COVID situation when they fall sick. So that itself has led to an increase in our OTC products as well.
So as we see the COVID scenario, maybe beyond that, should we see any changes to the existing demand?
I don't see the demand that we have. I think it's been given to us, it's been awarded to us, and we are very confident of being able to supply. And if we continue the momentum of supply, I think this will definitely turn out to be a permanent demand for us, or an award for us. One clarification. You said that.
Ma'am, maybe request that you return to the question queue for follow-up question.
Yeah, sure.
Thank you. Yes. The next question is from the line of Praful Bora from Emkay Global. Please go ahead.
Yeah, thanks. Sir, recently there was an article which said that there's some carcinogen which is found in paracetamol in Europe, certain European markets. So what's your take on that and any opportunity that goes up for it?
Yeah, Praful, I think you're referring to that Netherlands study of Chinese material. Yes, they said they have found some traces of parachloroaniline in paracetamol, which is carcinogenic. So we had a lot of customer concerns. A lot of customers started reaching out to us and saying, how are you sure it's not in your product? Basically, as per the specifications laid down by US Pharmacopoeia or any other pharmacopoeia, there's no test for parachloroaniline. This is an impurity that is formed in the manufacturing of PAP. And if at all it's present in PAP, it gets converted into parachloroacetanilide. And there's a test for chloroacetanilide. And all our batches in the entire history have shown non-detectable limits of chloroacetanilide. So we presume that chloroaniline is not present in our product because everything gets converted. But then the question comes up saying why Chinese product has this, what way are you different? There's a difference in manufacturing, where in our manufacturing process, we assume there could be a complete conversion of chloroaniline, whereas in Chinese may not be, we don't know. And this got our customers convinced, and I don't see any risk to our product from this. If at all, there could be a small opportunity.
And Jill, also for our product, we have Granules India. We also have a control of this impurity in our finished product released, I think, with a specification limit based on the FDA guidelines. So, and as of now, based on the trending, we have seen a trending of not detectable. So whether by trend or design, this aniline is not detected in the APAP either.
Got it. Thank you.
Thank you. The next question is from the line of Abhishek Vishwajit from Wallford Financial Service Limited. Please go ahead.
Hi, it's Abhishek Maheshwari. So my question is regarding metformin. So I just wanted to a clarification if you're still selling, actively manufacturing and selling the metformin API, PFI, and the 500 mg IR.
Sorry, what was your question?
No. I'm just asking if you're still actively manufacturing and selling the metformin API and PFIs at least, because...
Yes. We haven't stopped manufacturing of anything. In fact, demand is going up for all the other variations of products. The only product that we have voluntarily recalled is metformin 750 mg ER product.
Okay, thank you. That's it.
Thank you. The next question is from the line of Shivan Sarvaiya from JHP Securities Private Limited. Please go ahead.
Good evening, sir. So my question is on the base business. So you alluded to the fact that you are entering into new geographies like Europe, Canada, and South Africa. So my question is, if you could give some perspective on the margin profile for the same product that you would be having in these countries going forward.
These geographies, at least I can speak for Europe, because we have a little bit of experience there, is a little lesser than what we make in the US. But the consistency and price will be more sustainable in Europe compared to the US. However, I would say it's not as high as the US margins.
Okay, sir. And the other, and South Africa and Canada, sir, if you could give some color there.
So Canada is a little more profitable than US. South Africa, we are just exploring. We'll get a better idea. We are working on the dossiers. Meanwhile, we are trying to, in these markets, we are going to out-license these products to other companies. We will not get into the market ourselves. So other existing companies which have been selling metformin or some of these products, they will stop making these products themselves and keep continuing to buy from us. So it's only cannibalizing their own business. So that's how we get in.
Okay, sir. Okay. Thank you very much.
Okay.
Thank you. Ladies and gentlemen, due to time constraint, we'll take this question as the last question. I would now like to hand the conference over to the management for closing comments.
Thank you, everybody, for joining the call today. I hope we were able to answer all your questions. But if not, please feel free to reach out to Richa. Her details are on the investor presentation, and we'll be happy to take one-on-one calls post this call. Again, thank you so much for joining. Hope all of you and all of your families are doing well.